Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 3 strong buy monthly dividend stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 dividend stocks that all pay out their dividend on a monthly basis, which is great if you're looking for some regular passive income. And on top of that, they also come in with a strong buy consensus from Wall Street analysts. So today we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into these 3 strong buy monthly dividend stocks. First on the list, we're taking a look at AGNC Investment. It trades under the ticker AGNC, currently priced at about $9.80 per share. Over the past year, it has gained 12.3%, and in the last 3 months is up 3.65%. Like all of our stocks today, AGNC Investment operates as a REIT, or a real estate investment trust. They invest in mortgage-backed securities, and their investments primarily focus on residential MBS, which are pools of mortgages that are guaranteed by a U.S. government agency or government-sponsored enterprise. These guarantees protect against credit losses from Fannie Mae, Freddie Mac, or Ginnie Mae. Their investments also include collateralized mortgage obligations and residential and commercial mortgage-backed securities. Now, there are regulations around how much income a REIT has to distribute to its shareholders, so you'll often find some pretty attractive dividend yield opportunities here. And AGNC is no exception. Their current monthly dividend comes in at 12 cents per share for a dividend yield of nearly 15%. Their next ex-dividend date is on the 28th for payment on July 10th. Their most recent quarterly earnings report came out on April 22nd, where they just came in ahead of earnings expectations. Their Q2 report is due out on July 22nd, where analysts are anticipating earnings per share of 54 cents. And this last quarter, their first quarter in April, came out at 58 cents per share, beating estimates by 1 cent. The company had an overall investment portfolio of $63.3 billion. Following that quarterly report, we did see a 5-star analyst from Maxim Group reiterate their buy rating. They cited strong Q1 results and favorable market conditions, saying that they reported comprehensive income that not only exceeded their dividend, but led to an increase in tangible book value. This performance is underpinned by the historically wide interest rate spreads, low prepayment risks, and favorable funding conditions, all of which support the company's income and the sustainability of its dividends. AGNC currently has 10 analyst ratings, coming in as a strong buy based on 8 buys and 2 holds. And the average price target comes in just shy of $10 per share, which would be a modest upside potential under 2%. But when we look at our most recent ratings here, we do have a few buy ratings from back in April that have downsides as the stock has already surpassed that price target. Our low-end price target is from Barclays with a hold here and a downside of over 8%, but both of our more recent ratings coming in with an upside of 7%. For our second monthly dividend stock, we're looking at Whitestone REIT. They trade under the ticker WSR, currently priced at $13.23. Their stock has climbed 43% over the past year, and in the last 3 months has gained about 7%. Whitestone REIT is a community-centered real estate investment trust that acquires, owns, operates, and develops open-air retail centers located in some of the fastest-growing markets in the country, including Phoenix, Austin, Dallas-Fort Worth, Houston, and San Antonio. Their centers are convenience-focused, merchandised with a mix of service-oriented tenants providing food, self-care, services, education, and entertainment to the surrounding communities. Whitestone has paid a consistent monthly dividend for years, and while their dividend yield used to be in the double digits, it has calmed down a bit since with the recent stock growth. We can see back in 2020 that yield was as high as 15%, but has settled down recently. Currently at 4 cents on a monthly basis, the dividend yield comes in at 3.65%. The next ex-dividend date is July 5th for payment on July 11th. They shared their first quarter earnings report back on May 1st, where the company said they had a strong quarter on multiple fronts. They reported earnings per share of 18 cents, coming in 1 cent ahead of expectations, and they had revenue of $37.2 million, which did grow year over year. They said the leasing environment in our markets remains very strong, and our leasing team continues to execute and drive shareholder value, as shown by the 31% increase in leasing square footage signed in the quarter versus the first quarter of the prior year. And once again, we have a 5-star analyst from Maxim Group weighing in on the REIT. They give their buy rating on a combination of stable management and financial metrics. They said that their valuation of the stock suggests there's potential for growth, and the shares are trading at a multiple that is below the price target multiples based on the 2024 core funds from operations estimate. The anticipated dividend yield and stock price appreciation could lead to an estimated 12-month total return of about 16%, making the Whitestone REIT an attractive investment opportunity. The Whitestone REIT does just have 4 current analyst ratings, but they do all come in with unanimous buys. And that strong buy rating comes with an average price target of $14 for an upside potential of 5.86% from current prices. Looking down below, on the low end, we do have a buy rating from back in May, which does have a slight downside of 1.2%, and our high-end price target is the most recent here from JMP Securities with an upside of about 14%. If you've made it to our third stock today, then this is your reminder to make sure you hit that thumbs up button and that you're subscribed to the channel. Our third monthly paying dividend stock is Agree Realty. They trade under the ticker AGNC, currently priced at about $61.40 per share. Now, they have had some ups and downs this past year, overall down 1.1%. In the last 3 months, though, they've been climbing back a bit, gaining over 10%. Agree Realty focuses on retail properties leased to some of the biggest retailers in the country. They own and operate over 2,100 properties across 49 states, totaling approximately 45 million square feet of gross leasable area. Their portfolio includes properties in many retail sectors, such as grocery stores, pharmacies, consumer electronics, and discount apparel stores. Some of their big-name tenants include Walmart, Dollar General, Best Buy, CVS Pharmacy, Dollar Tree, TJ Maxx, Kroger, and the list goes on and on. Agree Realty used to pay their dividend on a quarterly basis, but made the switch to monthly a couple of years ago. And their current monthly dividend is 25 cents per share for a dividend yield of 4.77%. That next ex-dividend date is June 28th for payment on July 15th. In their most recent quarterly report, they did fall slightly short on the earnings side, but revenues did outpace expectations. For their Q1, they reported earnings per share of 43 cents, which fell 2 cents short from estimates. But looking at the revenue side, it came in at $149.45 million, which beat by over $1 million. They also saw their net income increase over 8% to $43 million, and their core funds from operations increased 3.5%. One analyst weighing in on the Agree Realty stock comes from JMP Securities. They reiterated their buy rating on strong financial tactics and market positioning, saying that they acknowledged the company's adroit management of their balance sheet, which has remained robust despite broader financing market challenges. They said that Agree Realty is well positioned to seize opportunities in the investment sales market, particularly at a time when competitors may be less active, and to add valuable properties that align with the existing portfolio. The stock currently has 12 analyst ratings, coming in as a strong buy with 10 buys and 2 holds. And analysts' average price target comes in at $65.88, which would imply an upside potential of 7.38% from current prices. Looking at our list down below, on the low end, we do have a hold here from UBS with a downside of 2%, and then our high-end price target does come from JMP Securities with an upside of 15.75%. So that is a quick look at 3 monthly paying dividend stocks that all come in with a strong buy consensus from Wall Street analysts. Let me know your thoughts on these companies in the comments down below. You guys know I always love hearing from you. And of course, keep in mind these videos are never a suggestion to buy or sell any specific stock. So please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.